Hey guys, Jackie Luna here, your go-to realtor in the Northern California Central Valley area, here to talk to you about my top 7 steps for buying a home. Step number 1, find a good realtor. Definitely one of the most important steps. A good realtor and a local realtor for the market that you're looking in is extremely important. For one, you want them to know the area that you're looking in. You want them to have the ins and outs of what community is going to match what you're looking for the best. You also want them to know what the market climate looks like in that city, in those communities, in those specific areas that you're trying to find a home in. Another really good reason to find a good local realtor is they'll have wonderful lender connections and vendor connections. So during the process, if you need somebody to come out and give an inspection, give you flooring information, anything, your agent is going to have that contact information. Step number 2 is gather your documentation. This is a big one and it can be time consuming. But some of the things that you'll need and that a lender is going to ask you for, unless you're paying cash for a home, of course, are 2 years worth of tax returns. So make sure you get those in probably a PDF file that you can have to email over to your lender. Also, 2 years worth of W-2s. So they're going to want to see what your income's been like in the last 2 years and make sure that it matches up with your tax returns as well. You're going to want at least 30 days worth of pay stubs. So if you get paid weekly or bi-weekly, make sure you have the last 2 pay stubs or 4 pay stubs for 30 days so that you can send those off to the lender. One of the other things that they're going to want are at least 60 days worth of bank statements. And when you pull this information from your bank, make sure you include every single page. So there's usually a page or 2 that says left blank intentionally. Include that with the packet of paperwork that you send over to your lender because they're going to want that page also. That is step number 2, gathering your documentation. Step number 3, get pre-approved. So once you have all your documentation compiled, I would talk to your realtor. Get a lender recommendation from your realtor of who they've used, who they have a streamlined process and knows can close deals with. I'd also recommend maybe reaching out to your current financial institution. If you're with a credit union or a bank, talk to them as well. Another one would be an online broker. They typically do everything online. You're emailing them over your documentation. There's no brick and mortar in your community. And a fourth option would be to find an actual broker. Your realtor will have some great ideas of who to use for brokers. And the nice thing about brokers is that they work with multiple banks. So they can match your current situation and find you the best rates and program for your situation. So I always recommend at least looking into a broker. I do recommend applying with at least 3 different banks to find the best rate, program, situation really, and loan program for you. Now, my top tip is do not let all 3 lenders run your credit. I usually recommend my clients to have one lender run their credit initially, get a copy of your credit report from that lender and give it to the other 2. That way you're not getting all these pulls. Now, in the event that one says, and sometimes they do, I have to actually pull your credit to give you the hard numbers, make sure you get all of your pulls done within a 2-week period. It's less of a hit on your credit than if you go 1 week here, first week at this lender, 3 weeks later at this lender, 3 weeks later at this lender. Those will all impact your credit, but getting 3 of them done, maybe 2 of them done in a 2-week period of time isn't going to be as bad. Now, the official pre-approval letter will tell you what the lenders approved you for. So the way that they determine that number is based off of your credit, the documentation that you gave them, your credit, your income. They compile all of that information, look at those numbers, and then tell you what they will give you. So it'll have your loan amount on there, what they'll lend to you. It'll have an interest rate that they'll charge you, and it will have a down payment amount as well as your loan program. So what I like to do with my clients is not necessarily just go off of the purchase price that they say that they're going to allow you to buy. If they tell you that they're going to give you $400,000, for example, you have a 3.75 interest rate and you're putting down 5%, your monthly mortgage payment's going to be roughly $2,500. Now, I always ask my client, are you comfortable with the $2,500 payment? If no, what payment are you comfortable with? Let's say your payment is $2,200 that you'd be comfortable with. So instead of $400,000, let's look in the $355,000 range purchase price. Same rate, 3.75, same 5% down payment. That's going to give us the $2,200 a month payment. So I like to work backwards, and I definitely recommend you do the same as well. Ask your lender, what purchase price can I have if my payment is X amount? If the purchase price seems a little low and you're comfortable going a little higher, work that way too. Next step is step 4, the house hunting part, which I always find as the most fun, to be honest with you. So one thing I definitely recommend is communicate really well with your real estate agent. Let them know the areas that you're interested in, what kind of community you're looking for, if there's any specific school districts or any landmarks that you're looking to be around. Always make sure you communicate really well. And talk to your realtor about what type of market you're currently in. Is it a buyer's market or is it a seller's market? That's really going to dictate how you structure an offer, and your real estate agent will go over that whole process with you. If it is a seller's market, you will have to be a little bit more aggressive with some of the terms of your offer, which your agent can help you with. And if it is a buyer's market, buyers have a little bit more leeway, and your agent can help structure the best offer for you. Number 5, actually making your offer. So you and your real estate agent will review the terms of your offer, and they will send over those terms to the offer and your pre-approval letter to a listing agent on the other side. From there, that listing agent will present your offer to the seller. The seller will either accept, reject, or counter your offer. If they counter your offer, they're going to come back to you with terms that they like a little bit better, and you have the ability to negotiate and come to terms to hopefully get an accepted offer on that property. Number 6, your offer was accepted and you are opening escrow. Very exciting time. Your offer was accepted, you're opening escrow on this new property. One of the first things to know is that this contract has to be signed by both sides, the buyers and the sellers, for it to be a binding contract. That contract then goes, in California at least, to a title and escrow company where the process begins. They're a non-biased third party that helps facilitate all the money and making sure that the contract is followed exactly as it's written. Now, things to note in your contract will be your due diligence period. Very important time frame that your agent will keep a close eye on and help facilitate with you. So there's 3 things that are typically in the due diligence period. It's your inspection contingency, it's your appraisal contingency, and your loan contingency if you're taking out a loan for the property. What you want to do is have as many inspections done so you can find, what's going on with this home, what condition is it in, and if I need to negotiate to have either things repaired or credits given to have things repaired. Your agent will have a wealth of inspectors and options for you to choose from so you can pick the best inspections to have done on the property. You'll typically have a time period that you have to have all your inspections done and review those reports so you can lift that inspection contingency. The next one is the appraisal due diligence period. You have a certain period of time for your lender to call and coordinate for an appraiser to come out, which is a non-biased third party, to give the value of a home. So your lender doesn't want to give you $500,000 for a home that's really only worth $400,000. It doesn't make any sense to them. So they do hire an appraiser to go out, look at what's sold in the area, look at the area specifically and the home itself to give value. Your third contingency and due diligence is your loan. You have a specific time period to make sure that your loan is pre-approved, underwritten, and you get the clear to close. Now, the underwriting process is a pretty intense process. It's where the lender takes all the documentation you sent over to them. It goes to the underwriter who looks at everything with a fine-tooth comb. They will call your job and make sure you really still work there. They will look at your income, they'll look at your bank statements and make sure that you can really afford this property and that you don't have things coming out of your bank that will influence or affect you being able to pay your mortgage every month. Once that's done, and all of your contingencies and your due diligence period is up, you will get a clear to close, a C2C from the lender. That means your docs can be drawn up, your loan docs, and you can sign, which leads us to the next step. Step 7 is closing on your home. In California, we typically use a title or escrow company for closings. Some other states use attorneys. What happens is they get the documentation from your lender, all of your loan information. So your payment, your financed amount, your interest, everything in regards to your loan. If you default on the loan, what happens? And you go in and you sign those documents. You also sign documents transferring title from the current seller to your name. Another thing you want to bring with you at closing is typically your down payment. You can either wire it in early or take your check in early, or you can bring a check to the closing table and give it to the title clerk there. And that is my 7-step process for buying a home. If you have any questions on the process, let me know. Shoot me a message, you can comment below, and if you like this video, feel free to share it. And like and subscribe below. I'm going to be posting videos every week with great content on how to buy or sell your home. Thanks for watching. Talk to you soon.